Welcome here to our law school at Hong Kong U. Some of you are first-timers. In fact, very much often the technologies are like, I've never been to law school before. And we are in one of our nicest halls, so welcome. My name's Brian Tang. I'm the founding executive director of LITE Lab at Hong Kong U, which stands for Law, Innovation, Technology, Entrepreneurship. I also am on the board of the Fintech Association. And I thought, as many of you would know, this week is actually Green Week in Hong Kong. So there's various activities and events happening this week in relation to promoting Hong Kong as a green and technology hub. And I thought, why not we organize something at relatively short notice to kind of pull the relevant stakeholders together, especially in the different sectors that I'm in. So this is the law school, and one of the aims that we have here is how do we get more lawyers to be involved in the climate issue, right? So how do we deal with, how do we get more lawyers to be more climate conscious? And we'll talk a little bit more about that with our climate contracting initiative and what we have in our second panel. But in my other capacity as part of the Fintech Association, one of the big pushes by the government is in relation to Green Fintech. So Green Fintech is a subsection, and you'll hear more about that, so I won't steal your thunder. But we're really pleased to be able to have collaborate with the Fintech Association in relation to this. The HKMA actually had a Green Fintech competition late last year, and they announced 4 winners and various other finalists like as well. And I was lucky, and when I reached out, I was able to get all 4 kind of involved too. So the 4th one is actually, there she is, Frena's in. Okay, good. Dialing in from Singapore. So without further ado, if I can pass it over to the co-chair of the Green Tech and ESG Committee of the Fintech Association, Sandeep, to chair this particular panel in relation to how green techs can power Asia's green finance ambitions. In our second part of the programming, we'll be talking about climate contracting and dealing with leading lawyers who are in this space as well. So without further ado, can I please put your hands together for Sandeep and the panel? Thank you.
Thank you, Brian. Thanks for hosting this event and for this wonderful venue for all of us. On behalf of the Fintech Association, we are happy to be associated with HKU LITE Lab, which is doing some pioneering work. So we have a couple of sessions, obviously the Green Fintech panel first. So my name is Sandeep Sethi. I'm co-chair of the Green Tech and ESG Committee in the Fintech Association of Hong Kong. As Brian alluded to, green tech and green finance is a big topic for this week. So last year, the finance secretary in the budget announced that they want to make Hong Kong as a green finance center and a green tech center. And as part of that, we have the Hong Kong Green Week happening with various events this week, including this one. And green tech was also identified as one of the 3 verticals which the Hong Kong MA wants to focus on. So we are right in the middle of the action. And to talk about that, we have a very esteemed panel. I'll let them introduce themselves, starting with William.
Thanks, Sandeep. So hi, my name is William. I come from a company called Blue Onion. Blue Onion is an ESG fintech company that basically looks at data, and we analyze and provide ratings for companies and funds. Thank you.
Hi, my name is Mark Blake. I'm CEO of a company called Diginex. We're founded in Hong Kong and headquartered here in Hong Kong. When we first started building software, we used to build large supply chain transparency platforms for governments. I wanted then to grow up and be just like Palantir, for those of you who are familiar with that as a technology company. Unfortunately, I didn't have $30 million of Peter Thiel's seed money, and I didn't have the CIA's venture fund, In-Q-Tel, behind me. So we stopped building software for other people and started building products for ourselves. We built 2 products, one called Diginex Lumen, which we built together with Coca-Cola and Unilever, that looks at identifying risk in large global supply chains, particularly around human rights due diligence, gender risk, and child labor risk. And then we also have Diginex ESG, which is what we won the HKMA award for. And I encourage all of you to go to our website, and you can access a 7-day free trial and try out the platform for yourselves, which is focused on SMEs and helping them with their ESG reporting journeys. As we became well known as a software platform that helps SMEs, we started being approached by large ratings agencies. Fitch Ratings owns 21% of us, as well as large commercial banks, to help them get access to their SMEs that they were struggling to collect data from.
Dave Sander, I'm the co-founder and CEO of All Infra. We're a Hong Kong-based climate data company. We have a primary product called All Infra Climate, and it looks at really three areas: the collection, storage, and use of climate-relevant data. The main use cases for that are in reporting and then creation of green financial products. And we'll talk a little bit about that as we go through the presentation.
Hello, everyone, and this is Terry with COGO. COGO is a net zero transition facilitator. We originated from New Zealand, but now we have a great development both in EU market as well as New Zealand and Australia. And I'm based in Hong Kong, taking care of Greater China market and North Asia as well. And we have very good tractions with banks, helping their customers to understand their carbon footprint associated with their expenses. So we are working with banks to serve their retail clients as well as SME clients as well. So SME decarbonization is a big topic throughout the Green Week, throughout these few days. And we will be happy to share more with the panel later on. Thank you.
Yeah, thank you. Prerna, do you want to do a quick introduction?
Sure, thank you. And hello to everyone. My apologies, I couldn't be there in person. My name is Prerna Devecha. I'm the Global Head of Market Development for ESG and climate-related credit risks at S&P Global Market Intelligence. Quite a mouthful that was. I'm based in Singapore, and in my current role, I manage the market outreach, the strategic client engagement, the business strategy, and the product roadmap of our climate solutions, one of which is climate credit analytics. We work extensively in the area of climate scenario analysis and climate stress testing, and climate-related financial reporting for financial institutions. Of course, later we'll have a chance to share a bit more on this offering and how we're facilitating the green tech journey of our clients. Thank you.
Yeah, thank you, Prerna. So let's kind of dig right in. So green fintech and green tech is a buzzword, but I'm sure it means different things to different people. We have a panel which comprises of all HKMA Green Fintech winners. So I would want to ask them, what does green fintech mean to each one of you?
All right. So, I mean, there's lots of fintechs around in this world. And obviously, the journey towards being greener is a big mandate for companies and governments, because we're trying to reach net zero one day, hopefully. So therefore, this concept being green is really important. And our solutions are all trying to address different ways of trying to get towards a better future, a better, more sustainable future. And hence, we're classified as green fintechs. And therefore, we obviously also serve the bank community, or we're one of the stakeholders within the banking and finance community. That's my interpretation, and happy to hear other views.
It is a very wide description. It can cover energy storage, batteries, different materials. We're a software company, and we're regulatory driven. So the example I always use, and I think we're all familiar with all the supply chain legislation coming out of Europe right now, lots of acronyms with no vowels in them which sound exactly the same to each other, which are, in theory, going to apply to a lot of companies, both European and also companies who are present in Europe. And the questions I've always tried to understand is all this regulation, which is really good in theory, is suddenly asking that 1 million procurement professionals around the world also become experts in biodiversity risk, in climate risk, in human rights risk. And the reality is that it does not. And you can think of Bob and Mary, 30-year procurement professionals, probably very good at their job, and they've always purchased on quality and price, and that's about it. And suddenly they have all this regulation flowing their way, saying, well, now you also have to procure on all these different risk criteria. So they're not equipped. And maybe there'll be a new generation of procurement professionals that will come along in 5 to 10 years, but they're not there yet. So you have a talent gap there. You also have a talent gap at all the tens of thousands of companies which are now going to have to report on these new regulations. And even if we thought sustainability consultants were the answer, there aren't even a fraction enough of them to meet the demand that's been generated by the companies who will have to report on these new disclosures to the procurement professionals who don't understand the new disclosures. And even if the companies do report, those tens of thousands of companies, there's nobody around who's going to read all those disclosures to work out whether they're meeting the new legislations which are coming out that procurement professionals then have to purchase by. And in my mind, the only way to achieve that is through technology and to allow those groups of procurement professionals, the folks at the companies who are responding to disclosures and the procurement professionals, and then also the people who have to work out whether the companies are saying the right thing. So for us, our focus is on how do we help with that regulatory compliance by using technology.
So I guess for Green Fintech specifically, to me, it's more around financial technology that's applied to facilitate, I guess, environmentally friendly practices within financial institutions and that that universe. So whether it's ESG and data analytics platforms, crowdfunding platforms, financial technology that helps with the reporting around green bonds, sustainability-linked bonds and loans, those sorts of things. That's sort of how we look at it.
I think the keywords associated with Green Fintech is transition. So we are all in a transition era that need some help. So as Mark put it, technology will be the most efficient way to collect the right data point, to prompt the users for their transitional journey, to facilitated, customized recommendation to the users, and let the regulators and banks to understand these kind of transactions. And also, finance associated with numbers. So numbers will be able to traceable, will be able to measurable, and will be able to setting target. So I believe green finance will be most important functions of green finance is to help all the party involved to make a transparent, measurable, and achievable transition.
Yeah, thanks. Prerna, you want to chip in? Or?
Yeah, sure. I can chip in. I think from my perspective, green tech means the ability to help our clients easily quantify climate risk. And what that essentially means is that the objective for any solution provider with regards to climate risk management, the category that we participated in, is to help them meet that need, right? So what I tend to say is one can't really manage what you can't measure. And so the objective for us to help our clients was, with tools that can measure the impact of climate risk on their loans and investment portfolios. And so to me, this means to have a methodology and a solution in place that can help clients with transitioning through the robust quantification of climate risk.
Okay, thanks. So as we've heard, it's quite a vast topic. So we heard a few themes consistently. Transition was one, climate risk management, reporting, data. So we'll kind of dig in a little bit deeper into these topics when we go into the specific solutions which each one of the winners has. But just kind of taking a step back and kind of coming back to the point I mentioned in the beginning in terms of Hong Kong trying to position itself as a green tech and green fintech center. And in fact, the financial secretary today in his budget speech also announced a couple of more initiatives on the Green Fintech side, including a proof of concept subsidy scheme, which will be launched in the first half of the year. So obviously, the government and all the supporting organizations are doing their best, but from your perspective, how do you see Hong Kong as a green tech center, and who do you see as their main competitors? Anyone can answer.
Can go first. So definitely, I believe Hong Kong has a very renowned foundation in financial, in terms of regulatory, in terms of talent, and in terms of efficiency. And also, we have regional impactful infrastructure that can help facilitate different kinds of green finance to be happen here. So and also we are in a very unique position that the most important and international city in China. So that will be one particular strength that we are riding on, and we have to ride on because in the nowadays everyone aware about the geographical, political, and regional tensions. So there is a lot of challenge, but I believe that we are in some way that still quite far ahead from some of our competitors. So I believe that is one way we should double pump on the financial green finance development in Hong Kong.
It's being videoed, so I can't be too bearish. I think it's relative to what? Relative to before, then absolutely. It's nice to see the signaling. And I often get asked where Hong Kong stands with regards to other jurisdictions and reporting. I say, well, Hong Kong Exchange is one of the first, if not the first, to make it mandatory. And that's really important from a signaling perspective. It's not to say that all companies do it well, because they don't. An exercise you can do in your free time is take 3 small cap listed companies, cover up the names, look at the same disclosures, and try to guess which company is which. Because by and large, it's copy and paste. I would say relative to other jurisdictions, mentioning on competition, it's quite far behind. I think there's an overabundance of caution. There is an overabundance of risk aversion. The time that we've spent, I think some of us spent in the Middle East around COP28, the speed of deployment and the scale of deployment far outstrips what's possible here for various reasons. Obviously, size helps, but I think proof of concept funding is a little bit underwhelming. I think we've all been through seed funding rounds. It's not that difficult to get proof of concept funding. It exists in Hong Kong already. You can go to Hong Kong Science Park or you can go to Cyberport, and proof of concept funding exists already. And there's, even in the current venture climate, there's a lot of seed funding for early stage ideas. That's not the problem. And proof of concept funding means you'll apply, you'll do, I haven't read the details, but 6 to 12 months, 6 to 18 months, and then there'll be a review process, and then we'll think about it, and then so you're 24 months down the line before actually being deployed. It's not what is needed. What is needed is wide-scale deployment. And I know as a company, there are jurisdictions you can go to, and if you have a good solution and you can demonstrate your commitment to that region, I don't quite want to uproot my family and go and live in Abu Dhabi. But if I did, the opportunity is there as a climate tech startup to go and deploy at significant scale in that ecosystem of funding to startup to deployment with local conglomerate to scale is there significantly. And I think until we move away from, they were talking at the green thing, we're gonna release a position paper and a white paper. It's like, enough with the papers. I think we all know what the landscape is. You can go to any venture cap in town and ask them for an industry map. They'll have it. They've all had armies of associates looking at the green fintech industry over the last 18 months because they're not deploying capital. So they're doing mapping. And the key is around deployment, because only with deployment, and the technologists will say, fail and fail fast. So the only way that you'll see if something works is to try it really quickly and take feedback on and adjust and move accordingly. So I think the proof of concept, I don't knock it too much because I haven't read the details, but solving for the wrong problem. Proof of concept funding is not difficult to get. What is difficult to get is significant backend to deploy at a scale large enough to have a meaningful impact. Yeah. And you can get that in other jurisdictions.
No, that's true. And we obviously will get more details on what the budget refers to. I think they also mentioned in terms of commercialization. So hopefully they've listened to what you are saying, and it's kind of in the details, so we'll see. Okay, but you also partially addressed one of my subsequent questions which I had in mind, but we'll come back to that. We probably kind of move to the solutions. So obviously, Hong Kong has huge ambitions in terms of green center and sustainable finance. So let's dig into the solutions, and probably I'll start with you, Dave, in terms of how does Al Infra solve for some of the problems which are out there in the market?
Thanks. So I guess we look at a lot of financial products on the environmental side, and one thing, I'm not sure sort of how familiar you are with how those products are constructed, but financial products that are environmentally based, so carbon credits, RECs, green bonds, sustainability-linked loans, they're one of the only financial products where the value is very, very tightly linked to the quality of the underlying data, how it's provenanced, where it came from, how it's been reported, how it's tied to the instrument. That has a very big impact on the value of the instrument itself. And you will have seen over the last 6 months some of the issues in the carbon credit market where credits have been marked down very aggressively because of failure. I won't go into the failures, but failures sort of across the board in terms of how methodologies were implemented and things like this. And so if you peel that back a little bit, it all comes down to how the data that underpins those products is collected, how it's stored, and then how it's applied to the product itself. And so we look at it in two areas. One is the creation of the product, so collecting data from assets that can then be used to underpin a product, but also collection of data that can then be used to report for a corporate. And you have those two elements that are equally important. So I think risk is increasing dramatically for corporates globally because you've had this rush to come out and announce that you're net zero, carbon neutral, RE100, all this sort of stuff. And I think we'll find over the next 6 to 36 months that there will have been statements made that were incorrect reporting, these sorts of things. So the risk is increasing, I think, for corporates globally in that sort of reporting. So measuring what your exposure is very important, and that's one area that our product takes care of. The other side of that is when you are creating a financial product that is then going to be used to offset or meet some of the statements that you've come out and made. So you've said you're going to be 100% renewable, you need to go and buy renewable energy certificates from a jurisdiction where you consume that energy in the same time period from the same grid, and you need to make sure that you can prove all of that. And the tools that we have make that very, very easy. So it's easy for an energy producer to record that data, store that data, create a financial product out of that data, a renewable energy certificate, 100% digital, that can then be transferred to a buyer or purchased by a buyer, that can then retire that instrument, and they can then very easily show their auditor, the market, all of the information that underlies that certificate and prove its provenance. And so that's sort of what this tool that's up on the screen is trying to solve. There's a number of other issues in the space that I think are going to become very important as we move forward. One of those is data residency. So you have issues in the market, particularly in the climate space, where people want to prove the provenance of a product, but don't want to give away all the granular information. So if you think about it from a competitive perspective, or even from a data security perspective, you want to record data, you want to use that data to create a product or create a report, but you don't want to disclose your weekly information, your daily information. But someone who's using the aggregate of that wants to know that the aggregate is underpinned by daily information or weekly information. And so through using zero-knowledge proofs and some other new technologies, we're able to do that. So our stack allows you to record data on a very granular basis, keep that private to the asset owner. So you could collect data, for instance, on some of the projects that we have, collect data every 2 minutes. That data is stored. It can then be aggregated over 6 months, 1 month, 1 year. And anyone who sees that aggregate can know for sure that it is based on the 2-minute by 2-minute data that was collected without that underlying data being exposed. I think that's going to become more and more important when you think about provenance, and also when you think about data residency, which is, you know, a big issue that, you know, a big issue globally. If you're recording data in a particular jurisdiction, you can't take it offshore, but parties that are buying green bonds that have financed a particular asset in that jurisdiction want to know the performance of that asset and want to understand that the performance was recorded correctly and reported correctly. So that's what the technology does. It's a blockchain-based solution. Encourage you to go to the website and take a look at it. We've got a lot of demo videos. There's a number of implementations in Hong Kong and outside Hong Kong. We have quite a big business through Southeast Asia and through North Asia. And I think, just coming back to answer your other question, Sandeep, about what we could see sort of Hong Kong do a little bit better, I think, in the, from an incentivization perspective, one of the biggest issues we see is with corporates and their appetite to take on and try new technologies. I think the appetite in other parts of the world is probably slightly greater than we see in Hong Kong for the adoption of new technologies. So when you look at Japan, when you look at the Middle East, some of Southeast Asia, you'll find corporates have a greater appetite to try something new. And one way to fix that, I think, in Hong Kong is perhaps to incentivize corporates slightly differently to what's been done so far. So, you go and do a green bond right now and you can get a rebate from the government, or you were able to get a rebate from the government for certain costs that you incurred for auditing and reporting. Now, something that would be nice to see is maybe a different rebate if you adopted new technologies for that reporting and data gathering. Things like that, I think, would make a big difference in this market.
Yeah. No, thanks, Dave. And obviously, we'll have a Q&A session at the end. But if any of you have questions specifically to what Dave's solution is, please feel free to ask at this point itself, because the slide is there as well. Otherwise, we can come back, obviously, at the end as well. So, yeah, if no questions, then we'll probably move to transition finance, because transition finance was mentioned by at least a couple of you as closely associated with Green Fintech. So Terry, I'll ask you, what does COGO offer in terms of facilitating the transition finance?
So COGO is a facilitator of transitional finance. Besides technology, we also see it as a broader sense, which is cultural, behavioral, and also compliances point of view. So what COGO is doing with the different banks around the world is we help both their retail customers and SME customers to understand the existing footprint in the sense of their expenses or expenditure within the daily life or within their own operations. So we have a few solutions I want to go through. First of all, the carbon data report. Carbon data reports is helping the banks itself to understand their financed emissions. So if you are familiar with the disclosure requirement, there are a few scopes that organizations need to disclose. Scope 1, Scope 2 is their own emission, and also the emission services they have purchased, like powers. So for these two categories, most of them can be controlled. But the Scope 3 is for a banks. Most of them are from their financed emission. That means their loan or their credit portfolio that are lended to their customers. So these obviously are outside of their control. So we are seeing a lot of regulatory requirement is now requiring banks to understand that their own finance emission baseline, where are they now? And they need to submit measures and policy that help themselves to drive or lower these finance emissions. So taking New Zealand and Australia as an example, these two governments has already imposed this kind of requirements to banks. So we are seeing this scope 3 requirement will be getting tighter around the world, and this carbon credit report will be helping that banks to understand that. And we have also two more solutions. I'll go through it quickly. One is personal carbon manager, which are now deployed within banks' own mobile apps. That means after opt-in, the users can get what they spend it alongside with a carbon footprint. So this is a we believe, a very important way to improve the carbon literacy of the users, so they can begin their decarbonization journey by understanding where they are now. And accordingly, within the apps, the banks can also make other suggestions according to this behavior to make a proper, help the users to make proper actions to decarbonize, like changing the normal vehicles to an EV. So there's a second one, and the third one is a business carbon manager, which is having the same logic. We trace the SME's carbon footprint scope 1, 2, 3 through their expenses, and we make it very easily for them to make a carbon accounting report that they can use for their own financing, financer or investor to help this third party to understand their carbon performance, and then also helping the banks to get more insight about the SME customer. And accordingly, they can design, produce customized products, financial products to help their customers to decarbonize. So there's three solutions now we are providing. Thank you.
Yeah, thanks, Terry. So obviously, the second one in terms of personal carbon manager seems quite interesting, because I guess a lot of us would be keen to understand our carbon footprint. So do you already see this solution live at certain banks in Hong Kong?
So these solutions will be live in Hong Kong within this year with one of the major banks. So hopefully next time I'm here, I can showcase that for you. But we have already deployed these solutions around the world with more than 20 banks. So one of them are NatWest, and another one is ING. They are most, we can say, a climate leader in the financial sectors in the Europe market. So hopefully we'll be able to bring this experience to Hong Kong very soon.
Okay. Sounds interesting, thanks. So moving to climate risk management, and we know a couple of us in the panel have solutions addressing climate risk management. So I'll ask Prerna first to kind of highlight how S&P Global is solving for climate risk management.
Thanks, Sandeep. Firstly, I think, when it comes to climate risk management, I'm going to go back to my quote unquote saying that one cannot manage what you can't measure. And so our objective through climate credit analytics is to provide a climate scenario analysis and credit analytical suite model, which was developed by S&P Global Market Intelligence in collaboration with Oliver Wyman. The tool really combines our data resources and our ability to quantify credit risks with Oliver Wyman's capability on climate scenario analysis and stress testing expertise. The way we do this is by utilizing all the different financial data sets that we have on companies and using a sector differentiated approach by helping our clients quantify climate risk on their loan portfolios and investment portfolios. This analysis is highly dynamic. It enables both single entity as well as portfolio level analysis for about 2.2 million companies on the fly across multiple sectors globally. And with this, of course, we help, risk managers, investment professionals, sustainability teams, and others really, in this space to assess both transition and physical risk related to climate change on their loan and investment portfolios. It is designed primarily with the objective of climate stress testing and to help with compliance on sustainability reporting in line with TCLP and now ISSB, and to meet with growing requirements from regulators, investors, and stakeholders to assess, disclose, as well as manage climate risks. We do this in the form of providing conditioned financial impact, so full financial statement impact up to 2050 across various climate scenarios at various time horizons, multiple temperature targets, and we do this by using climate scenarios from the climate science community. There are scenarios developed by the Network of Greening the Financial System. There are climate scenarios that are designed by various regulators for their own markets, HKMA being one of them. One can really customize everything across carbon pricing levels, technology transition, risks, as well as opportunities, which is the other point I really wanted to make, because when we think about risk management, everyone really tends to think about downside risk, right? But there is obviously transition opportunity in the form of financing, the right sort of capital expenditure, the right move towards transition. So it is a tool to help both manage that downside risk and to identify transition opportunities. I think I'll sort of also add a couple of other points, if there is some time, in the sense that we've focused a lot on automation and scalability. The reason I bring this up is, of course, because this is, topic on Green Fintech, right? And so, while, of course, the methodology is robust and the underlying data sets that, underpin the methodology are vast and really deep, the other thing we really pride ourselves is on how we sort of automate the analysis. The delivery mechanism is via API to enable analysis of thousands of companies, at one go, and this can be integrated into any loan management system via multiple sort of coded languages. So that's on the automation and the scalability aspect. And last but not the least, how we differentiate ourselves is with the fact that this is not just a tool or solution that we hand over upon subscription to our clients. The one thing we also, sort of differentiate ourselves from, maybe similar providers of climate risk management tools is that we provide an added service in the form of methodology workshops, user trainings, because let's face it, climate risk stress testing, climate risk management is very new for our clients. I think someone just brought that up, that, people in this field, are new to their job titles. It's a very new job title over the last couple of years only. So while a person may be great at risk management and may be doing risk management for about 20 odd years, climate risk management is new, right? And so the service component is quite key here. What we tend to do is, obviously provide that knowledge transfer that is required to make, climate risk management a successful implementation at our financial institution clients.
Thanks, Prerna. It's interesting to know that your solution is not only covering the downside risks, but more importantly, also highlighting the transition opportunities. So that's pretty interesting. Thanks. William, how does Blue Onion kind of solve for problems in the climate risk area?
Sure, thanks. So just on the last topic of climate risk, Blue Onion is also what clients are asking about climate risk as well. So we're developing a new tool that's that'll be fitting the NGFS framework, and that hopefully be coming out soon. And that's a product that we are developing. But on the one on screen right now, that's not a climate risk solution per se. I mean, it's more about the whole theme of transition that we're all talking about, but it's all about transition of capital. So when you're investing or when you want to invest, do you invest into more sustainable companies or products? Is it something that's on top of your mind? And I guess for most people, your answer would be yes, I'm hoping at least. So the HKMA and a lot of the other regulators, they're all sort of pushing funds and incentivizing funds that there is a market for investors that want to invest into sustainable funds or ESG funds or green funds. And our solution on screen that won one of the awards at HKMA FinTech competition is that we are able to analyze funds through multiple lenses, especially through the SFDR framework, which in Europe is highly adopted. And then there's actually two levels, one called Article 8 and Article 9. And Article 8 is a light green fund, and Article 9 is what we call dark green. Dark green means impact. So what we've done is we've looked at the regulation in a lot of depth and also other related regulations, and we've come up with a framework and a solution that analyzes the constituents within a fund. So if you're holding 1,000 companies within a fund, how does an investor look at 1,000 companies and decide, should I invest into this one? Whereas the next fund out there has maybe 1,500. Who has the time to do all of this? So one, as Mark and many others mentioned, and there aren't enough experts out there who can analyze all the state data. So if you're able to get the data, automate the analytics, have a framework that is aligned, then the solution comes out very quick. And what we do is we update our data on a monthly basis, so you're always getting the most up-to-date data. So the second point is coverage. I mean, there are how many companies listed in this world? How many financial products listed out there? We're talking millions, right? We add them all together. So who can look through a million products and decide which one to buy? Obviously, we may not all have access to 1 million products, but some people may do if they're in the private banking space. And then the third element that I think is really important is also seeing through the breakdown of a fund. So what percentage is in what type of activities? I mean, they may say it's a green fund, but what does it mean? Is it just investing into batteries or EVs? Or are there other sectors that it's investing in? Have they got no exposure to certain controversial sectors as well? So even medical, for example, some people might find that for-profit hospitals are an issue. They may not want to invest into a fund that invests into medical that is charging people a premium. So there are lots of things that we can consider, and as consumers we should look into this, but who has a tool? And that's why we saw this gap. We saw clients asking for something very similar. We looked at the frameworks out there available in the market, and then we developed a solution that came through, and hopefully the solution will be seen through some of the retail banks in Hong Kong.
Yeah, thanks, William. So let's move to ESG disclosure, because obviously the requirements on ESG disclosure for corporates has been evolving, and different jurisdictions have kind of been adopting it, and it's always difficult to get the right ESG data, but we have fintech solutions, and Mark's company is right in the mix of it. So Mark, you want to talk about how Diginex is solving for that?
So this the second product I mentioned, Diginex ESG. This is now, thank you. This is now live in 55 countries around the world, and of course, including here in Hong Kong. We have a very specific focus on. Originally, it was SMEs. I think we broadened it to include companies of all sizes, but companies of all sizes who don't want to do ESG, who don't like doing ESG, who don't know how to do ESG, who are unable to go to KPMG, EY, Accenture, et cetera, for an expensive consultancy solution. But being asked to do this, and each time I speak to a client, I ask two questions. Where are you in your ESG reporting journey? And why are you doing this? And the question one is normally 50-50, brand new versus doing it for a bit. And the second question, 9.9 times, 9.5 times out of 10, they're doing it because somebody else is telling them to do it. And so are you doing it because you as a company want to do it, or are you doing it because an investor, a regulator, a board member, a customer, some external party is putting implicit, or in some cases explicit, pressure on you to report? And so we built this solution to focus on, I call it the grumpy CFO demographic. Ryan's heard me talk about it a lot. And pitching ESG as not standing for environmental, social, and governance, but standing for earnings, survival, and growth. Because the motivations that appealed to large caps to start ESG reporting, do this or the temperature will increase, do this or the ice caps will melt, do this or the polar bears will disappear, resonated with large companies, but do not resonate, we have found, with the average grumpy CFO at a $100 million industrials company that is just worrying about whether they can make payroll next year or win new customers or stay afloat. Is too much of a tangential problem. But if they can focus on, if I do this and I change this exercise from an eye-rolling, here's yet another thing I have to do, what a pain it is, why do I have to do this? Most folks, or a lot of folks anyway, see this as an extension of CSR and picking up rubbish from the beach or planting trees or that type of exercise. There is a transition, I think, where CFOs are beginning to realize, as one put it to me the other day, this is entering the territory of go to jail if I get it wrong information. So I think there is that realization that if you're using it as part of your IPO filing or you're using it to raise more funds, you can get in significant trouble if it is wrong or you're deliberately falsifying. So that then enables them to move from this is a chore and a task to I start collecting this data, or I start collecting it well. I can therefore use it to win more customers, because we work with chambers like, or with many chambers of commerce here in Hong Kong. And I'd say most Hong Kong small mid-caps probably don't care that much about ESG. But if they want to supply into Walmart or Target or Aldi or Lidl or Tesco's or any one of these large conglomerates that have huge purchasing power, ESG is now a mandatory part of the procurement process, because those companies are subject to ESG regulation, which is making them report. And so it is part of the procurement process. So it allows me to earn more because I'm winning more customers. Survival, I can get access to cheaper forms of capital because banks are falling over themselves to offer sustainability-linked loans and green finance products, and ultimately grow. So as we became well known as the company that focused really on that demographic, and we have lots of large companies who come to us and say, can you help us, but you need to do this other thing. And we say, no, that's not what we do. What we do is focus on grumpy CFOs who are using Excel and don't want to do this anyway, and well, let's help them. And therefore, banks started to approach us saying, well, we don't need you for us. We have all sorts of great options, and there's wonderful options for that scale of reporting. But we do need you to be able to access the tens and hundreds of thousands of SMEs that we bank. And we can't use traditional solutions because that requires human intervention to roll out. And as soon as you put humans in the process, you impede the ability to scale. It's not a very humanistic thing to say, but it's as soon as if you want to roll out to tens of thousands of SMEs, you're not going to get there quickly, but by asking relationship managers to do that for you. And banks are looking to solve for a number of different things in our experience. One, risk. So how do I prove in my large profile of hundreds of thousands of companies I'm not lending money to companies who are using children to burn tires in their backyard? If you're lending to Changkong or Sanhankai or New World, it's great, there's lots of information. But your average $50 million a year apparel manufacturer in Bangladesh, you have no idea, or very little idea. Second is you want to be able then to identify companies that are bad, but help them transition to good. And as a bank, you want to make money, so you lend them money to be able to finance that transition from bad to good. And then lastly, banks are generally in a rush to be seen as a leader in sustainability and to be at the forefront of this and to arm their relationship managers with talking points that makes that relationship with their clients stickier. How can we help you with this? And what are some of the difficulties that you as a board are seeing with your ESG reporting? And that's been our experience, and we're now rolled out globally with several banks, really focused on that demographic of grumpy CFOs. I think you can all picture one in your mind at small and mid-cap enterprises who are looking to do this for the very first time.
Yeah, thanks, Mark. Great to know that we also have solutions now from Green Fintech for grumpy CFOs. So thanks for that. So I just saw that we have 4 minutes left. So while I have a few questions, I'd like to kind of throw it open to the floor if they have any questions for any of our panelists. Any questions from the floor? Otherwise, then. There's one for yeah. Okay. Please.
Okay. President, nearest microphone. Yeah, right.
Economic motivation, they will be able to provide their data. But I guess like in practice or in reality, I think a lot of the listed companies or like even like this, as you mentioned, like SMEs, right? If there are no regulations requiring them to do the disclosure, assuming they're not listed, how do listed companies actually get those data from their suppliers? If their suppliers are not required to make disclosure. I think that kind of, I don't know, like if you have any like, good recommendations for corporates to do that.
So most of the SMEs are, Most listed companies are SMEs. I think that's always a misconception that listed companies are large cap, but what is it, 2,200 companies listed, 1,800 SMEs. But of the suppliers into Walmart and so on and so forth. At the moment, it tends to be brute force. Do this or we will not buy from you. And I have been on calls with suppliers from these companies where the brand has said, you have 18 months to do this, and if you do not do this, we will not work with you. And it's as simple as that. I would say some brands have a lot more leverage than others to force suppliers. So if you're a supermarket and you sell barbecues in April and May, because that's going to lead up to summer, well, British summer, 2 months, you have very little leverage over the factory that makes barbecues because you're only representing a very small percentage, and so it's hard to force it. But if you're a large clothing manufacturer that represents a 60% share of that supplier's revenue, then you can force it. And so that friction is happening right now. How can brands force it through their supply chain? They can do it through incentives. Also, we will reduce, this is how our other tool, Lumen, helps them with that. If you do this, it reduces your audit cost. Because we all know now the social audit process is kabuki theater. It's, I'm coming to your factory next Thursday. Get everything ready. I'm going to audit you, and then I'm going to leave for a year. That's the process. And so the factory owners, all of them, but some of them, turn on the air conditioning the minute before the auditor arrives. There's wonderful conditions in the factory. And then the minute the auditor leaves, they turn the air conditioning off. And then the cycle continues. But to the extent that you can supply this data reliably and verifiably, you can reduce the cost of audits. That's a bit more of an incentive rather than a stick.
Thank you.
Any other questions?
The carbon emission reporting, finance emissions baseline understanding, and how companies have their own targets, and you see how you can ameliorate and try to mitigate to see if they can reach their baseline. But how do you motivate banks to do more than the bare minimum? Like, how do you motivate them to try to push their target higher and higher? Because obviously there's going to be a pushback between the two. And your experience, all of you.
Sorry, do you mean to push for the action from the banks or from the banks?
Yeah.
Because you are referring to the carbon report, right? Carbon data report.
But I thought that's because of the bank, they have to do the data reporting.
Yeah, right. So so banks are now in some jurisdictions, they are required by regulator to first of all make the disclosure for their financial emissions. So if the regulators are asking for it, you have to act accordingly. That's how the world works. So yes, so they have to do it in some jurisdictions, not yet in Hong Kong, but we are seeing Hong Kong Exchange has make a requirement for disclosure in 2025. So that means that listed companies in Hong Kong, they need to start their disclosure process this year, and then they need to disclose in 2025. So most of the banks operating in Hong Kong, a lot of them, in fact, is listed in Hong Kong Stock Exchange. So by that force, it is also another way to push them for this kind of disclosure. So there's number one. Number two is a lot of banks also committed to net zero in 2050. So this is also another public commitment they have been made, and also everybody in the world will be watching how they are transitioning to this objective and achieve that. So there's number two. And in fact, if you are reading those annual reports of these banks, they are getting a lot of statement and also showcase of how they are increasing their sustainability loans or finance vehicles and facilities or access. So that will also be a future growth engine for bank, because you can imagine they are now financing a lot of high climate risk or not quite planet-friendly business. So by a certain period of time, or maybe by 2030, they may need to get rid of all of them in order to get to the peak of their emissions. That means they need to grow their sustainable loans or sustainability-linked loans dramatically to fulfill to fill up this gap. So there's also one very tight target they need to achieve in the next coming a few decades. So that's why carrot and stick is already in place. So they are pushing to act accordingly. Although I'm sure the whole panel will say that they are too slow. And but still, I hope that yeah, in this industry, if you are in the green sectors, everybody besides wearing a financial hat, everybody, I'm saying everybody had a very green heart. They have truly committed to do something to help the industry and help do something for the planet to make this transition. So that's why we are hoping that with everybody go or join the green team, we'll be able to make the norm, make the noise, and also make the wheel moving.
Thanks, Terry. And I know there might be more questions, but we're already 5 minutes over time for this panel. So I'd like to take the opportunity to thank all our panelists for sharing their views. And it was good we had some diverse views as well. And while Hong Kong is doing a lot, there's clearly more we can do to improve the ecosystem. But the good news is, as you've seen, we already have live solutions to solve for the climate challenge we have. So thank you so much.
Yes, so thank you all on this panel. So I wanted specifically to bring this for the attention and actually get it recorded, because we kind of have the best of breed here. Not only are most of them actually Hong Kong companies, but most of them are actually Hong Kong startups, right? So we love New Zealand too, and we love the big companies at S&P. But you know, the three of you are Hong Kong startups, which is a really great story to tell here. And they're winners for the HKMA, and we actually have Angus from KPMG, which helped the HKMA set up the competition. So with this recorded, hopefully more people will hear your stories, which is part of our intention here. So thank you very much for that. And secondly, while Mark was a little bit spicy about various things, and that's why we love Mark. You know, he did talk, we are doing a map. So I think on the one hand, we need the behavioral patterns to change, and then we need the awareness and the motivations. And then so on Friday, we have a map that's being launched with the SFC, which hopefully will be helping the ecosystem better understand the green fintechs here in Hong Kong. So without further ado, if you can put your hands together and thank the panelists and Sandeep again as well. Thank you.